Now, Barclays Bank has announced a 13% drop in profits for the period ending December 31st, 2013. The bank posted 7.6 billion shillings in the year compared to 8.7 billion shillings a year earlier. Now, this comes as players in the banking sector feel that the heat from the growing non-performing loans. Here is Michael Karanja with that report.
A Central Bank of Kenya sector report released last month for 2013 indicated that bank loans amounting to 80.6 billion shillings had gone for more than 3 months without being serviced as of December last year, up from 61.6 billion shillings a year earlier. The reality of this hit home today when Barclays Bank announced a 13% drop in profitability, occasioned by an increase in provisions for non-performing loans, which soared by 747% during the period. The bank also had a one-off restructuring cost of 788 million shillings that affected its profitability.
So we have a situation where, roughly speaking, the level of non-performing loans is growing at twice the level of overall loan growth. So this is something, as we look at risk management, that is going to be imperative that banks get right, because we cannot really continue as an industry to see this level of non-performing loans.
Despite the drop, net interest income rose to 18.9 billion shillings from 18.1 billion shillings a year earlier, while loans and advances increased by 13% to 118 billion shillings. Customer deposits grew by 10% to 151 billion shillings, giving the bank a solid funding base for growth. The bank remains resilient and optimistic of growth in 2014.
We took a particular decision during the course of the year to focus now even more on the SME segment. We believe that this is a segment where the country is going to grow, and we needed to be very relevant to that segment.
Barclays has secured good business going forward as the lead arranger for the government's $2 billion Euro bond, as well as KenGen's 5 billion shilling debt-raising exercise.
One of the areas that we felt we needed to participate on was the investment banking space. We have now set up an onshore investment banking unit, which is focusing on helping our clients, both government and private sector clients, to actually go and tap in the capital markets.
The performance did, however, have an effect on dividends to shareholders, which has been cut from 1 shilling per share to 50 cents per share. The news didn't go down well, with the bank's shares dropping by 3.7% to 16 shillings and 95 cents in early morning trading. Michael Karanja, KTN Business.